Hi everyone, this is Somi Vijay presenting a bit of the news and what we are doing out here at Helix this week, how our portfolio is performing and how things are moving right now, and what we expect to do over the next few days. So, welcome to our weekly live session, Tuesdays at 11 o'clock UK time. So what's been going on over the last few weeks, maybe 6 to 8 weeks itself is there is trade tensions, global trade tensions created by the tariff policy that came up. Uh, while we say tariff alone, but you can't see that alone in isolation because trade is in a lot of ways it's related to how inflation concerns are being managed, what economic data we are getting on the ground, uh, what is happening in the labor markets, and also how companies are dealing with it. Right. So, how it's going to impact corporate earnings? Are there going to be any dip in terms of corporate earnings because of all these changes, etc.? And then the other side to also look at is, are there any systemic risks that are getting triggered because of something like this? Right. That is how I tend to look at it. Right. Tend to look at it from a sort of holistic picture. We can't just say trade tensions and then stop at it. Right, exactly. Right. So if you look at U.S. and China trade tensions or trade relations over the last few weeks and months, there's been a lot of attention towards that. And over the weekend, or rather last Friday, we saw notifications that there is an ease of tensions, and there is basically uh, a reduced tariff policy that is going to be in place. So this shift definitely was welcomed by the market yesterday, and we had a pretty good trading day yesterday. When I looked at it, I said, "Okay, fine. There is a good momentum that the market is picking up, right? Which to me is pretty good news as far as I can see. But this is not enough because a lot of this crisis is really it's basically a manufactured crisis. We were not here on our own, right? Meaning we were brought to this standpoint because of certain decisions that Trump made, and there's a certain policy way that he is essentially thinking. I'm not going to comment on it. I'm not going to say whether it's right or wrong. My job is to make money for my investors, right? Whether the markets are up or down, and I continue to focus on my role in terms of how we are making money, for our investors. Secondly, I think I mentioned this right at the start: inflation concerns. So all the major, um, you know, central banks have been talking about sticky inflation. I'm not going to go into specific numbers here, but what sticky inflation means is that despite monetary policy easing, inflation doesn't ease that much. And that is largely to do with the structure of the economy, right? And the way in which the structure of the economy is moving currently, right? So we've become largely a services-driven economy in most of the developed countries, and many of the developing countries as well. We've become more services-oriented, which means that goods are necessary to develop those services, and those services are the ones that are essentially making us money. But we can't just look at goods and services inflation alone. There is a humongous asset inflation, which we see a lot because, I tend to look at, the PE ratios of all of the listed companies in the S&P 500 and the on the Dow Jones and the FTSE, etc. And then kind of calculate what percentage of it is really undervalued versus how much of it is overvalued. Now we have a situation where the undervalued lot is very, very less. So valuations and asset inflation from a stock pricing is high. We also look at it from the real estate market. Real estate largely has become unaffordable for most of us, right? So if you're looking to buy your first home, whatever, it's become very, very unaffordable. So in the past, like maybe 30 years or 20 years before, I think in 2004, 2003, if I'm right, 2003, I bought my first house, and at that point of time, essentially looking at it from my perspective, the house that I bought was 5 times, I think 6 times my annual salary, right? Taking that and then comparing it to where we are at this particular point of time, we are looking at 50 times. either the salaries and the net income that people get, that hasn't grown. That is one side of the story, and then the other side of the story is the fact that asset prices have gone significantly higher, right? Basically in the real estate market, and it's become very, very unaffordable for people to go in. So this week we will be looking at various economic data in order for us to kind of give a overall view in terms of how things are. We will look at also the labor market data. UK unemployment rate came out at about 4.4%. In the UK, average earnings, including bonuses, increased by about 5%, 5.5%. Job growth also increased in the last 3 months to March. You're looking at the US data, the UK, and the European Union largely. But then we look at the rest of the world, including India, Asia, Middle East. We basically look at those markets as another set, right? So we want to look at the US and Western Europe in one set, then the rest of the world in another set. There's also a lot of developments in the global shipping space. Significant drop in containers booked for shipping from China to the US because of this trade tensions that were there, and there's also the increased levy on ships that are arriving into the US. So with that, what has happened is there's definitely a significant supply chain shock that is waiting to hit us. Right. So if ships don't arrive today, you don't feel the shock tomorrow, right? You feel the shock 3 months down the line, because what happens is these things have to be loaded onto containers, taken into warehouses, and then by the time you buy it, it's maybe 2 months, 3 months down the line. So the consumer is likely to see shock. So we've also been observing the speeches by the various central bank officials, US, Fed, looking at UK, the European Central Bank. Closely, we are analyzing those hints about future monetary policy decisions and interest rate restrictions, how they are observing this. Because as a small hedge fund, as a GP firm, what we do is we observe the market and we talk to you about it, and we go and execute it. That's it. We're not experts here, right? We're not experts, and we don't intend to be the expert and saying that is how it's going to be. That's not our intention. So take action on that. We will tell you as a subscriber as an LP, what you should be. So what are we expecting today? Unemployment rate in the UK. UK, we are also getting things around average earnings index for March. There's a speech by the Bank of England later today. There's also information about the claimant account change for April, which we will see later today. ECB speech today in the US. That is basically the business optimism index coming up, consumer price index coming up. We'll also be closely watching the Treasury bill auction, 52-week Treasury bill auction. Other than that, in Japan, basically the producer price index is coming up. New Zealand, data from the visitor arrivals, right? Tomorrow, in the Eurozone, we have the CPI, and also the index of consumer prices. It comes out in Australia, the wage price index coming in tomorrow. On Thursday, mainly US data that we'll be observing, retail sales, manufacturing survey, the Empire State Manufacturing Survey, as well as the Philly Fed Manufacturing Survey, also the producer price index coming up. On Friday, most importantly in the US, new residential construction. We are tracking the housing market, so we'd like to understand how it is going. And then also the University of Michigan consumer survey coming up. And then also looking at basically the trade balance between the UK and the Eurozone, and inflation expectation data from the University of Michigan. That's largely what we'll be observing. From a corporate earnings standpoint, Fox Corporation, which for yesterday we will be closely observing. First, we'll have to analyze that, come up with our own analysis. Fox is one of the companies that we've been monitoring for some time. We'll also be looking at Monday.com. Their earnings coming up later this week. There are a few other companies that are on our watch list that we'll be looking at. I think some of the trends that we are interested in understanding is, how is this impacting earnings? Trade tensions, they might not show right now, it will show later on, but you will see companies talk about it as part of things at conference calls. They will tell you, the CFOs will tell you what is going on. So, that will give us more insight into how the market is moving and what we can expect for the next months and quarter. From our own strategy, all of these can impact us. Yesterday, we had a very good trading day. Our trades went through really well. One of the things that we are very, very interested in is inflation concerns and how monetary policy easing can kind of solve the situation. And also, we want to understand there's very mixed economic signals. Right? This is not a situation like the past where a clear economic signals and a market that's going. We've got very mixed economic signals. US consumer sentiment is dipping. There's a rebound in UK. Now, knowing that these are interrelated economies, what is going on? What is really going on? Because it's a manufactured crisis, as I mentioned. Very, very important to understand how this is impacting the market and how this is going to Our, we operate a very agile, on-demand kind of a portfolio model. We use core plus satellites plus overlay kind of uh, strategy. So with that, what happens is we use signal-based. Uh, with the signal-based execution comes the challenge that we are constantly exposed to noise, which we keep away. We'll have to filter out a lot of the noise before we can take the signals. So that's going to be definitely a big challenge for us forward. Looking at our signals so far, and how things are working out, basically, so to speak. Say the upcoming macro events is something that we're going to be closely watching. Ecoeconomics is a model that uses the expectation that sustainability sets at the core of this strategy. And these are companies that are um, quite innovative. And at the same time, we use this model of endogenous growth, meaning market is up or down. These companies are going to be doing really right. Because when regulation tightens, they're already quite receive. That's the core of the satellites, which are some of them are eco leaders, some of them eco laggards. So we kind of trade long or short. We'll have to be very closely guarding the short book. Again, the short book is something that we manage very closely. So those are some of the things that we will be doing. Let me know in your comments what you plan to do this week, how your trading is going to be, and what are your plans, what are your thoughts, what are some of the um, issues and challenges that you're dealing with. And also remember, as a subscriber, you can book a strategy review session with me. Right, just go on to the message button, hit a message, and then we can find a suitable chat. Right, understand your strategy and how things are going. If there are areas that I can help you with, happy to help. But I'm learning from all of you. Right, I'm learning from all of you, and have to share insights. Right. Thank you. Thanks for watching. Thanks for listening in. This recording should be available to all the subscribers very soon. And enjoy. Happy trading. Thank you.